Welcome back to CEO Money. I'm Michael Yorba, your host. Thanks for joining us. All right, my next guest, Nelson Garcia, American Picture House. Nelson, welcome to the show. How are you?
Good afternoon.
I'm glad you're here. Nelson, first time on the show. Give us a little background, if I may, of you, what you do, how you got into the industry, what you're doing, and then we'll walk forward. You're going to be here for a couple of segments, so we can afford to stretch it out and talk to each other like we would if we were at a coffee house or something.
Well, thank you very much for the invitation. I'd love to be on the show. Let me start by welcoming everybody on the show, and thank you for having me. To answer your question, I started back in 1982. During my college years, I took a securities course, and my professor saw that I had the aptitude and the knowledge and the interest. He suggested that I go and work on Wall Street. So therefore, I joined the firm in 1982 where the Dow was about 1,000.
Wow. Long time ago. Okay, go ahead.
Then I went on to become a financial advisor with a fixed income firm and learned the fixed income business really thorough. All we did was bonds, municipals, corporate bonds, Ginnie Mae's, government bonds. I really cut my teeth there. Fast forward, I continued to work, and I moved to a firm down in Miami where one of my claims to fame was that I helped in doing an airport deal for Miami Airport, about $160 million. I was part of the underwriting group, also municipal bonds. Continuing forward, within the firm, in Florida, I opened my own company, which was a real estate investment trust on the mortgage side. I was the CEO for about 9 years, and did everything possible to grow the company and did everything involved with the company directly as the CEO.
All right. Now you're also involved with Angel Investment Partners.
Yes. Angel Investment Partners is an exciting role for me as a consultant. We work with companies that are growing, that have a niche in their particular industry. They are having high impact earnings. They're disruptive in their industry, and all they need is a little help and consultation. So within our Angel Investment Partners, there's senior people that really help in raising capital for them and point them in the right direction.
Let me jump in there for a second because there's a lot of things that you do besides this. You co-founded American Vest. You manage and supervise operations of sales personnel. Raised over $80 million for investors in North and South America. And you structured $35 million credit facility with Whitecap Financial. I mean, you've really got your fingers in the business. You rolled up your sleeves. You got a lot of experience in this. Let's move this along. And I wanted you to bring out also that you were noted in a book. Tell us about that.
Yeah, that was an interesting story. One of my friends, I'll call him John. He had said that there's a gentleman in going to have a seminar at this local hotel about how to identify investors and who they are and what they do. And so we decided to jump in the car and just head over there. And we did. We learned quite a bit. His name is Dr. Thomas Stanley. We became very good friends. He was noted for writing the book The Millionaire Next Door and The Millionaire Mind. But before then, he had written several books, and I kind of tackled him down at the end of the seminar. I said, "Well, can you please help me and help me identify more?" He says, "Well, I'm not interested." And then he said, and then I pursued him for several weeks until he finally said, "Okay, under one condition, if you question me, I will fire you." And so that said, I kind of listened to everything he said. He, unbeknownst to me, he guided me. He told me what to do. And within 12 months of him doing a results fact finding, what I accomplished, he said, "By the way, You did a very good job. But by the way, I will be noting you in the next book called Networking with the Affluent. It was written in 1992. Tom and I stayed friends for many, many years afterwards, and he called upon me to do speaking engagements and to write excerpts about his book.
Great. That's a great story. I like that. Let's get into convertible debt. I mean, talk to the advantages of investing in alternative investments, but really, from what I know of you, your background is convertible debt and bonds and debt structure. Open that up for us, and we've got about 3 or 4 minutes to start that topic.
Perfect. Well, convertible debt is, as the name implies, it gives the opportunity for an investor to participate in a company that's growing without getting involved with the stock itself. They'll get to participate in the stock, so it's called convertible bonds. One will earn an interest rate, and at a certain time, they will convert their bond into a certain amount of shares, and normally at a discount. So not only is the investor getting a return on interest, what we call coupon return, but also the growth and participating in the growth of the company. And they participate at the level where the stock is a lot lower compared to the market price.
How much lower, and how is that determined so the audience can get a handle on it?
Well, basically, it's determined by the management. There's some analytics that will take a whole segment to just explain about it. But normally, at this point, we're working with a company that we're offering investors a 35% discount. In other words, if the stock is trading at $1 for simplistic reasons, they'll get the stock at 65 cents.
Okay. When is it good for a company to go down this road versus an investor? Let's talk about both sides of this equation.
Okay. For the company, it attracts investors, and that's the name of the game. And the goal is for them to convert quickly, so they're not carrying a heavy interest rate. But it's designed for companies that are up and coming, not early stage, but a little bit beyond early stage. For an investor, it's the attraction is enormous. They get to participate in both sides. It's like biting the apple twice. The yield advantage is quite a bit. According to Bank of America Merrill Lynch, it's an average of 170 basis points higher. They get more market exposure. Historically, the risk-adjusted returns are normally higher for convertible bonds, better risk profile, and it's a hedge against inflation. It's a lower risk for interest rate rises.
It's interesting. I want to drill down into some specifics of convertible debt that it's worked, and maybe there's some times that it hasn't. But we need to go to a commercial break here shortly. So before we do, tell the audience how to reach you, and then we'll come back and continue the conversation.
Sounds great.
How does the audience reach you?
Oh, they can reach me by calling me direct at 980-215-8493, or they can send me an email at ngarcia@aphfilms.com.
All right, great. We'll be right back on the other side of this message for you with Nelson Garcia, American Picture House. And we're going to continue the conversation about convertible debt, and maybe we'll move into some other things that are going to be more exciting than just convertible debt, some of the other things that Nelson Garcia is doing and with some of the particular companies he's doing them with. We'll be right back on the other side of this break with CEO Money, your host, Michael Yorba. Welcome back to CEO Money. I'm Michael Yorba, your host. Thanks for joining us. All right, my guest this segment is Nelson Garcia. He is a consultant with American Picture House, AmericanPictureHouse.com. All right, Nelson, welcome back to the show. Thanks for being here.
Thank you.
You are a consultant in the financial services industry, and you, with your CEO experience, identify and guide companies, with expert information, whether we're talking about debt, capital formation, or management skills. let's walk through some of these as it applies to the companies in particular that you're working with now, don't be afraid to bring those companies out and tell us what they do, what their process is, and how you're helping them and where they're going.
Well, it's a short question with a long answer. Well, let me start from the beginning. What we do is like I said in the beginning of our segment, is that we look at companies that have something special about them. Is it demanding? Does the company have a demanding product? And excuse the word, but I look for something that has addictability. Would people come back? One of our previous clients had a product where it sold, and the return was 85% repeat business. So there was the holy grail of business is reoccurring revenue, and so this client had that kind of product. At this point, we're working with a company called American Picture House. As the name implies, they're a premier film production company based out of Santa Monica, California. They're seasoned executives that have done 60 successful projects, including companies like John Wick 1 and 2, Expendables, Black Hawk Down. Most people have heard of these movies. At this point, we have recommended that they go ahead with a convertible bond structure. And at this point, they're offering a pre-IPO 12-month, 8.75% convertible bond, going public at the end of this year, and the discount will be a 35% discount to the common stock at convertibility. So the the investor has an installation of 35% protection at a downside, plus the interest rate of 8.75%.
How much are they raising, and what are they using the money for?
Good question. They're raising about $4 million, and it's for production purposes only.
Is it a new film that they're doing, or
they have 3 films on tap at this point, and there are negotiations with distributions at this point, and we should be in completion and in production with one at the end of January or so, in the beginning of next year. So again, the addictability of it is that people love the movies. People like the Netflixes, Amazon, their distribution system, and Asia through Europe, South America. So it's a big distribution system. Demand for movies is always here.
Can we talk about the new movies that they're going to be launching?
The new movies at this point, one of them is called Spiral.
Mm-hmm.
Okay. The second one is I believe it's I don't have it in front of me, but let me just get that.
Okay, sure. In the meantime, are they looking for any supporting actors? I'd be more than happy to throw my hat in the ring. Just kidding.
Oh, they do have it. I have the list of the second movie is Spread the Word.
Sure.
Which is a movie, a feel-good movie about an individual that goes to Africa for a concert and sees things differently in his life, and he becomes much more of a helpful person instead of a person that's trying to sell records. And Thief is a movie that is one of those action spy thrillers at this point. And of course Spiral, which is one of the I'm seeing, and then we see scripts quite a bit, and there's plenty of scripts that are ready to go. But we have to pick. They have to see the movies that are in demand at this point.
Well, they've got quite a history of successes. I've seen the John Wick movies, and they're always great. I mean, you got to be into it to like it, but I love them. So, are they going to continue with the caliber of well-known leading men and leading women in their shows? I mean, because they've got.
Yes.
Oh yeah. Okay.
The quality. At this point, I can't disclose what the names are.
Right.
But I would tell you that they're high, top tier. Right. Quality actors in these movies that they have. The demand for them is unbelievable, and they attract the audience, and that's what we're looking for.
Now, you being a consultant with the company, why did you decide to go through a convertible debt structure versus anything else?
Again, it's a very basic approach to raising capital. This is not an early stage company, but it's coming along nicely, and it is an easier way to attract investors. One unique thing about American Picture House, investors fall under a very nice opportunity in terms of their taxes. There is an IRS Rule 181, domestic film production program, which allows investors to deduct 100% of their investment against ordinary income. So,
wait a
that
minute.
said,
Hold on. 100% of their investment against. Say that one more time. I want to make and do you have a legal opinion? You could email me that. I'd love to see this. Say that one more time.
well, I will
What?
caveat by saying check with your CPA and your tax attorney, which I'm not one, and I'll make that as a matter of record. But for the last 10 years, anyone that invested any type of production, be it a play, television, movie studio, anything of that type, to keep and attract production in the United States, they have designed a program called Domestic Film Production Program. It's been around for 10 years, okay, which allows, and I'll repeat it, allows investors to deduct 100% of their investment against ordinary income.
Wow. Okay. What about ongoing revenue? Let's say that they put on their investment in, they deduct 100% of their investment against ordinary income. What about if these films kick out revenue and they get revenue off of it? Is there also a tax advantage on that? Because I've heard about it, this IRS Code 181. Does that work?
It works. It works in the favor of the production company.
Okay.
As far as the investor is concerned, I'll give you an example how it works. Say John Smith earns $200,000 gross income.
Right.
Okay, and decides to invest $25,000.
Right.
His adjusted gross income is $175,000. So let's break this down for a second. At the 35% tax bracket, he would have paid in taxes on the $200,000, $70,000 in taxes, correct?
Yeah.
Okay. In this case, once you invest, you're paying only $61,250 in taxes, saving yourself $87.50 in taxes. So in other words, if you deduct the $25,000 from you deduct $87.50 from the $25,000, that much less you're investing because in essence the U.S. government is subsidizing your investment. On top of that,
go ahead.
You're getting 8.75%, and you're getting the stock at a discount.
Wow. Okay. That is something to take note of. Are you accepting public as well as institutional money? Or are you just focusing on institutional money now?
No, we speak to individual investors. We have a tremendous amount of investors that come in with our individual retirement accounts. And we offer individual retirement accounts, so any gains are tax deferred. So we do have that program for individual investors. We have a program for just outright investment monies. And yes, we talk to a select few of institutions that want to participate.
Wow. All right. Again, contact information for you. We've got to close out here in about a minute or two, but I want to make sure everybody knows how to reach you to participate with this caliber of an investment if they choose to get into the film industry. And I definitely want to meet these people. I'm just telling you right now.
Mm-hmm. Well, I'm here to answer any questions, no obligation. I am at 980-215-8493, or my email with any particular questions. It's ngarcia@aphfilms.com.
Okay, not American Picture House, right? But APH Films.
I'd love to send an investor package out to everyone.
Okay.
And you can visit AmericanPictureHouse.com as well.
But it's APH Films is really where you want them to go.
Yeah. My APH Films is our email that we use for investors with any questions.
Nelson, you've been a great guest on the show. Great information, and I can't wait to follow up. And I'll send you a headshot as soon as possible.
Well, thank you for having me. Love to be on the show again.
You will. Thank you. Nelson Garcia, consultant, American Picture House.